Good morning, viewers. It's Thursday morning, May 15, 2025, and I'm your host, Sunil Thakker of Sunny Talks Money. Welcome to ST Money 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. Please mention your email in the comment section so that I can forward you the daily market wrap in your inbox at exactly 7 a.m. Eastern Time each weekday. With optimism about potential trade deals and US economic resilience wavering, US stocks edged slightly higher on Wednesday. Major indexes wandered aimlessly for much of the day, with some shares of economically sensitive stocks retreating after jumping earlier in the week. Stocks closed slightly higher after flitting between gains and losses during Wednesday's lackluster session as investors waited for the next batch of economic data after a robust start to the week spurred by soft inflation data and a US-China tariff truce. The S&P 500 rose a mere 6 points or 0.1%, and the Nasdaq Composite gained 137 points, 0.7%. The Dow Jones Industrial Average lost 0.2% or about 89 points. The Russell 2000 also fell. The S&P 500 index had on Tuesday turned positive for the year for the first time since February. The benchmark index has now rebounded roughly 18% from its lowest closing level earlier in April when investors panicked over President Trump's tariff blitz. Other indexes are just keeping underwater for 2025. Meanwhile, President Trump continues his tour of the Middle East, securing $600 billion in commitments from Saudi Arabia. The visit has been accompanied by a flurry of AI deals involving American tech companies, while the US scrapped Biden-era rule timing the diffusion of AI technology. Eight of the S&P 500's 11 major industry sectors closed lower, with healthcare down 2.3% and materials down 0.96%, the weakest of the bunch. The biggest gainers were communication services, up 1.6%, and technology, which added about 0.96%. The Dow Jones Industrial Average's biggest losers were drug companies Merck and Company, down 4%, and Amgen, which finished down 3%. American Eagle Outfitters shares sank 6.4% after the apparel company withdrew its annual forecast, citing tariff-fueled economic uncertainty. Building on Tuesday's gains, mega cap and growth stocks rose, with Nvidia the biggest S&P boost, rising 4.2%. Chip designer Advanced Micro Devices shares rose 4.7% after it approved a $6 billion share buyback program. Boeing shares rose 0.6% after state carrier Qatar Airways signed a deal to purchase jets from the US plane maker during Trump's visit to Doha. Meanwhile, bond yields continued their recent climb. The benchmark 10-year Treasury rose to 4.529%, marking the first time it has settled about 4.5% since February. Fed Chair Jerome Powell is slated to speak on Thursday, and his comments will be closely watched for clues on how the central bank plans to proceed with monetary policy easing. With Wednesday being a relatively quiet day for economic data, investors were holding steady before April's producer price index and sales reading due on Thursday morning. My take: what now for stocks after temporary trade truce? With the avoidance of an all-out trade war between the US and China, this could mean that the worst of the tariff-induced pain is over, albeit temporarily. The recent announcements have been good, and that has caused a huge rally in Wall Street, but there is still that uncertainty. There's overhanging uncertainty about what world leaders, including President Trump, are going to say about trade. Also, any evidence of how much the tariff conflict has seeped into the economy in April will now be skewed, as suddenly over the weekend, a 90-day truce was called between US and China, and to a smaller extent in the US UK trade deal. Thus, more uncertainty. The powerful rise in risk and growth assets lost some steam as US stocks ended mixed on Wednesday, although the losses were minimal, suggesting investors aren't ready to call a halt to the rally as yet. The open question is how much higher from here for US stocks? The potential is an inflection point for the market, as it looks like it will be harder for markets to achieve gains from here without significant progress on negotiations with other trading partners such as Japan, India, and South Korea. The market's rebound has boosted some investors' belief in the so called Trump put, or the idea that the president will work to shield the market from deep declines. The next head scratching moment will be whether the Fed will cut rates soon enough. Looks less likely given comments from Jerome Powell of late. The market now seems dependent on the Trump put and on the Fed. Eyes now on Powell. And that's the wrap for today, my dear viewers. And if you got value from this, please do like, share, and subscribe this video as much as possible. Happy investing, stay inspired, and remember, it is all about money.